Hi everyone, welcome to today's video. I'm excited to show you a super easy and crazy effective method that can make you a bunch of money. Even if you're scratching your head thinking, this sounds too good to be true, don't worry, I'm going to break it down for you in the simplest way possible. Once you get the hang of this, you might just toss out all those complicated techniques you've been using. Stick with me as I guide you through every single step. Trust me, by the time you finish watching, you'll be a total pro at this.
But before that, I want to introduce you to our backtesting service, as it makes it very easy and saves you time when backtesting your strategy. Thousands of traders are using Trader Edge to get an edge on their competition. It also has a lot of features that would definitely take you one step ahead of your trading career, just like the position calculator that serves as a great tool for risk management. Are you not sure how to backtest? No worries, you will also get a full step-by-step backtesting plan which has a $100 value. Not sure how to build a profitable trading strategy? No worries, you will also get a full course on how to build a profitable mechanical trading strategy which has a $270 value. And if you sign up right now, they'll even throw in for pre-made high-quality strategies that have a $100 value. That's for $170 worth of bonuses, all for free. But only if you sign up right now. Trader Edge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below.
Alright, let's get started on this super cool trading technique. First things first, open up the TradingView website. Once you're there, pick the Euro-British Pounds currency pair. Now let's talk time frames. I usually go with the 30-minute one for this strategy, but hey, you can use it on any time frame you like, and it can make you money on all of them. We're talking about these special zones called Fibonacci Zones. They're like invisible lines that help us figure out where the price might go. But here's the kicker, these Fibonacci Zones are automatic, which means you don't need to draw them yourself. Trust me, drawing those lines manually can be a pain, and it can lead to fake signals that mess with your head, especially if you're new to this. These automatic Fibonacci Zones kind of work like walls that keep the price from going all over the place. They stop those fake out moments and let you know when the price is really breaking out. I put this strategy to the test about 50 times, and guess what? You could increase your account balance by a whopping 60% in just 1 month. Imagine you start with $1,000 in your account. With this strategy, you could pocket at least $600, all from just one currency pair. And here's the cool part, you're only risking 2% each time you make a trade. It's all about catching the trends and going with the flow of the market. There are these two types of Fibonacci zones that act like super flexible support and resistance zones. Don't worry, I'll explain this even more in the video. The best part is, I'm keeping things super simple. No crazy indicators or tools that'll make your head spin. This is easy peasy stuff that you can get a hang of in no time. You can spot really awesome trades within just a couple of hours. And guess what? This strategy works like a charm on those quick time frames, like 1 minute and 5 minutes. If you're new to this whole trading scene and still trying to figure things out, this strategy is like your training wheels. It's quick, it's straightforward, and you won't have to scratch your head over fancy indicators. Just make your decisions fast, hit buy and sell, and you're good to go. Okay, let's dive into the next step, adding indicators to our chart. Here's how to do it in a nutshell. Go to the indicators menu and look for something called AutoFit. It's a tool that helps us figure out where prices might go. Add this to your chart, and here's a tip. It's made by someone named Yangizi. Now, we're going to tweak the settings a bit. First, head over to the settings for this indicator. You'll see a bunch of options. For the input, don't change anything, leave it as it is. Then, scroll down to the style part and uncheck all those levels options. They're not that important right now. Keep scrolling, and you'll find the plot background section. Uncheck everything there, except for the first and last plot background options. Here's the cool part. Make the first plot kinda transparent by setting the opacity to 40. And for the last plot background, change its color to green and also make it 40% see-through. Now, we've got our first setup ready to roll. Remember those Fibonacci zones I talked about earlier? We're using the mass special areas that act like walls for the price. Forget those old-fashioned lines traders used to draw for support and resistance. Drawing zones on the highs and lows of the market is more spot on. The top and bottom Fibonacci zones become our super support and resistance zones on the chart. They're even better than just using a single line. This trick helps us avoid falling for fake price movements. And hey, even if you're trading on a cell phone, you're good to go with this strategy. Now, let's add another indicator to help us figure out when to jump into a trade. Waiting for the price to break through those Fibonacci zones all the time can be a bit of a drag, right? So, add something called Fib Top and Bottom by Brittle Trotter it. This tool mixes two things: Fibonacci levels and something called the Relative Strength Index to spot potential trading chances. The best part is, this thing doesn't play tricks on us, it's super accurate. So go ahead and bring up the indicator settings. And on the style, uncheck these two plots, then the RSI option. After that, head over to the inputs and change the RSI length to 21. And that would be all. But before we go on, hey, if you're finding this helpful, hit the subscribe button and don't forget to turn on notifications. And if you're liking what you're learning, give us a thumbs up and share this video with others. Alright, let's break down the first big rule for trading in simpler terms. Look at where the price is on the chart. It should be hanging out in the upper Fibonacci zones. This is like a sign that the market might switch from going up to going down. But hang on, just seeing the price there doesn't mean it's a done deal. Sometimes the price can bounce back and keep going up. So, to get a better grip on what's going on, we turn to our second helper, which is the top and bottom hunter indicators. Now, these indicators help us figure out what most traders are thinking and find possible chances to make trades. But be cautious and think things through. Pay attention only to the signals that pop up in the red zone of the Fibonacci. This zone is like a line in the sand that tells us which signals could lead to good trades and which ones might be risky. Signals outside this red zone aren't as reliable because they might not match up with the way the market is moving. Deciding when to start a trade can be a big deal. Once you've got the right conditions, let's fine-tune your plan by adding some more tools. One of them is the ATR Stop Loss Finder. It's there to help you manage risk like a pro. When you put this tool on your chart, try setting the multiplier to 0.8. This helps you keep your risk in check while still aiming to make decent profits. When it comes to stop loss, think about using the red moving average for a logical point to get out of a trade. And for those times when you're hoping the price will go up, look to the green moving average to decide when to bail. This way, you're all set up to handle things if the trade doesn't go your way. Figuring out when to take your profits is important too. Aim for a range that's 1.8 times the amount you risked in the trade. This way, you're being smart about risk and making the most of potential gains. Remember, opportunities in trading come and go, like waves. Sometimes, you might want to get back into the market after taking a break. But be careful, especially if you're trading with a smaller account. Stick to just one trade per currency pair to control your risk. On the other hand, if you've got more money to work with, you can make multiple trades per currency pair. But keep in mind, this flexibility should still line up with your trading plan and what you're comfortable with. Patience is your friend when it comes to finding the right moment to jump back in. Wait for a clear signal from the top and bottom hunter indicator before making your move. And don't worry, the stop loss and take profit levels you set earlier are still in play, protecting your trading plan. In the world of trading, a bunch of things like indicators, managing risk, and making smart choices come together to make success happen. Following this strategy's rule sets you up for a better chance at success and helps you navigate the markets with more confidence. Just a heads up, something like what I am about to explain might happen sometimes. Imagine you see our upper and lower indicators giving you a bunch of signals one after the other. It's like they're talking non-stop. Take a look at what happened in this case. We got 4 signals to buy in that green area. Here's what we do in times like this. Once you get a good signal and make your first trade, hold off on making any more trades for a bit. Wait until you see a candlestick finish above that fib low zone, and make sure the candlestick doesn't touch the bottom part of that zone. This helps us be more sure that things are heading in the right direction. And hey, if you end up losing a trade, don't worry about jumping into more trades right then and there. It's better to hold off for now. Let's break down the rules for buying in simpler terms. Just like the rules for selling but flipped around. When you want to make a successful buy trade, look at where the price is on the chart. If it's hanging out in the green area, that's a good sign. This means the price might go up, setting us up for some good trading chances. Now let's build on that. The next step is to watch those top and bottom indicators closely. If they give a signal to buy, that's like a big flag that says the market might go up. Time to make your move and use what the indicators are telling you. Here's a smart move to control risk. Bring in the ATR stop loss method. Adjust the ATR multiplier to fit your plan. This way, you're putting a safety net in place to handle any losses that might come up, all while keeping a good balance between risk and potential rewards. Speaking of rewards, figuring out how much profit to aim for is a big deal too. A common guideline is to try for a profit that's 1.8 times as much as the risk you took at the start. This way, you're aiming for nice gains while still being cautious. So, in a nutshell, when you want to buy, check if the price is hanging out in the green area and see if those top and bottom indicators are telling you to buy. If they are, go ahead and make your trade. With ATR stop loss and profit targets in the mix, you've got a solid plan in place. And hey, remember, consistency and sticking to these rules are super important. Once you've got both the buying and selling tactics down, you're all set to tackle the ups and downs of the financial markets. By the way, I'm going to put this strategy to the test using the Euro-USD currency pair. I'll make 100 trades and then crunch the numbers to see how accurate and profitable this strategy really is. Stay tuned. Okay, the results after the 12 months test are truly amazing. So let's check it out. Now, I used a 30-minute time frame. This was done using a 1 to 1.8 risk to reward ratio on the Euro-GBP pair. And it took 12 months of price data to find the 100 trade signals, which is actually very good. There were 66 winners and 34 losses. The win rate is 66%. This is a really good win rate because our risk-reward ratio is 1 to 1.8. The most wins in a row was 5 and the most losses in a row was just 3. As to the gain on the account was 84%, and that's risking 1% for trade. That means if you had a $1,000 account, you can gain at least $800 profit using only one currency pair. So I would request you to use IC Market, which will provide you zero spread and you will be able to execute pinpoint trades in market. Link in the description to join now. But if you want to know about another great strategy, then just make sure to watch this next video shown on the screen. Take care and goodbye.